Hey guys, Akil Stokes here, and welcome back to another episode of the Trading Coach Podcast. Today, we're talking about one of the biggest stories in the financial markets right now, and that's SpaceX preparing for what could be one of the largest and most valuable IPOs in history. Now, if you're newer to investing, don't worry, because as always, we're going to break this down in a very simple, very beginner-friendly way and discuss why so many people are paying attention to this upcoming public offering. But let's first talk about what exactly an IPO is. So, an IPO stands for an initial public offering, and it's when a private company decides to sell its shares to the public and begin trading on the stock exchange. Up until that point, ownership is typically limited to the founders, to employees, and to any private investors, people of that sort. Now, for years, SpaceX has been one of the most coveted and sought after private companies in the world, and investors have been waiting for a chance to own a piece of it. But because it wasn't publicly traded, they just couldn't. But that may be about to change. You see, according to recent filings, SpaceX is preparing an IPO that could raise, get ready for it, $75 billion. And just to put that in perspective, that would make it one of the largest stock offerings that we've ever seen. Also, that's roughly the amount that Japan just spent trying to weaken its currency, only to fail miserably as I watch us approach 160. That has nothing to do with this topic, but if you've been following along here on the podcast, and especially in the live sessions this morning, it just makes me chuckle. But anyway, back on topic, Akil. The company has reportedly been valued anywhere between $1.25 trillion and $1.75 trillion, depending on kind of what estimates you look at. And if those numbers hold up, SpaceX would immediately become one of the most valuable publicly traded companies on the planet. But there is one interesting detail from the filing that has caught a lot of attention, and that is that SpaceX plans to reserve up to 5% of its shares being sold in the IPO for certain employees and other individuals selected by company executives, which is something called a directed share program. Now, that's not completely unheard of, right? Companies like Airbnb, Uber, even Tesla, shocker, have used similar programs in the past. And the idea is to give certain people that are connected to the company an opportunity to buy shares at the IPO price before the trading begins and everything goes crazy. Now, what is especially interesting is that these shares may not be subject to the same lockup restrictions that typically apply after an IPO. And yes, before your Google fingers start typing, I am going to explain exactly what a lockup period or a lockup restriction is. You see, normally when a company goes public, insiders and early investors are restricted from selling their shares for several months. And this helps to prevent a flood of stock hitting the market immediately after the IPO. SpaceX, however, or at least appears to be taking a different approach. Instead of the traditional lockup period, the company plans to use a staggered release schedule. So some shareholders may be allowed to sell portions of their holdings sooner, while additional shares may become available over time. And the goal of this is aimed at creating a more gradual transition rather than having all the shares become available at once. Now let's shift gears, I don't know why I did that, and talk about another major revelation from the filing. SpaceX disclosed new details about its business relationship with an AI company called Anthropic. And Anthropic is one of the leading artificial intelligence companies, and it's often discussed alongside the names of OpenAI and Google when it comes to advanced AI development. And according to this filing, Anthropic is leasing an enormous amount of computing power from SpaceX AI infrastructure business. And when I say enormous, right, we are talking about computing power equivalent to roughly 325,000 NVIDIA GPUs. And if you've been following the AI boom, you know that high performance GPUs are basically the fuel that powers modern artificial intelligence, with the future fuel being the juices taken from humans as we're held captive in those pods while hooked up to a dreamlike AI reality with only a small percentage of us living in the real world, battling sentinels below ground. Why does that sound so familiar? Speaking of GPUs and CPUs and barbecues, because I'm hungry right now, if you're someone that is maybe unfamiliar about computers and you're interested in knowing what needs to be in a trading computer, or maybe you are familiar and just want to learn a little bit more, check out this free trading computer builders and buyers guide. If you're watching the video version, just scan the QR code in front of you and then you can download it and have it, boom, right away. Or if you're listening to this on audio, I'll put the link in the show notes below. I'm not really smart about technology, so I've used this to educate myself. And because I want to have custom devices when it comes to my trading and everything I do around trading, I actually had them build my computers twice, and I've been very happy both times. So it's a free gift to me, and now it's a free gift to you. So check it out. Anyway, focusing again, the agreement could result in Anthropic paying as much as $125 billion per month through 2029. And yes, you heard that correctly. $125 billion. And yes, you heard that correctly. Per month. And yes, that is a massive amount of revenue. But there is a catch. The filing also reveals that after an initial period, either company can terminate its agreement within a 90 days notice. So while the potential revenue is massive, investors need to understand that this deal isn't necessarily guaranteed for the long term. And because of that, this is one of those deals that analysts and institutional investors will likely be paying very close attention to as they evaluate the company's future and their potential earnings. Finally, let's talk about someone you thought we would have mentioned earlier. Elon Musk, right? What's his role in all of this? Well, the filing shows that Musk continues to maintain a significant control over the company through his voting powers. Interestingly enough, though, while some shareholders may gain the ability to sell stock relatively early, Musk himself has reportedly agreed not to sell any shares for about a year following the IPO, which is something that I personally see as a very positive signal because it suggests that the management is willing to keep substantial skin in the game even after the company goes public. So, what are the biggest takeaways from all of this? The summary or whatnot, I guess. Number one, SpaceX is preparing for what could be one of the largest and most anticipated IPOs ever. Number two, the company is giving certain employees and selected individuals special access to shares through that directed share program. Number three, investors now have more access to take advantage of a potentially enormous AI-related revenue stream through its partnership with Anthropic. And number four, the filing reveals a unique lockup structure that could affect how shares trade in the months following the IPO. Now, just to touch on number three, and I'm recording this after the podcast was initially recorded, but I just found out, or just came out today, that Anthropic has just revealed that it plans to go public as well in the US. So it's going to have its own IPO. So when talking about getting exposure to this company, yeah, that is still the case with SpaceX, but you're also going to be able to, if this goes through and if this is true, you're also going to be able to buy and sell its shares publicly in its own right as well. So just keep that in the back of your mind. So as always, if you're considering investing in an IPO, remember that excitement and headlines don't always translate into a strong investment performance. We've seen that time and time again. It's also important to understand the business, the risk, and the valuation before making any decisions, right? You definitely don't want it to be an emotional thing. So always remember that, always do your research, and always work with inside your risk whenever you're making any investment decision. So if you enjoyed the episode, you found it valuable, let me know. Hit that like button, share it with a friend if they want more simplified, dumb information on this subject. And of course, if you haven't done so already, leave me a rating and review if you're listening to this on podcast, or subscribe to the channel if you're watching this on YouTube. Hope you guys enjoyed, and until next time, plan to trade, trade to plan. Take care.